This might be one of the most important trading indicators right now and could be a catalyst for stocks in general, but for Chinese equities in particular, and also emerging markets. And I'm talking about the US dollar. And yesterday it was actually a short-term negative indicator because, and I've posted that one on Twitter, by the way, you can follow me there if you find me via _mm85. And I tweeted at 22nd of August that it looks like the US dollar is kind of topping out. So there was kind of a technical formation which was looking close to a double top here in the US dollar, and possibly that it would go down later on. But yesterday, actually, that thesis was invalidated. So then it made slightly newer highs, actually, and kind of broke through this important resistance. And that means that maybe in the short term, the US dollar is getting even more stronger. And this is having big implications for all of our stocks, also for our US equities. For example, here, companies like Apple or Tesla, they have a large amount of revenues that are coming from overseas. In this example, it's actually only the Chinese revenues. And I'm also using this frequently as an example to showcase actually how important China is, not only as a consumer market, of course, but also from the supply side of things. But, look at how many revenues these big companies are making in China. Between 20 and 30% of their revenues are coming from China. And they are, of course, usually nominated in Chinese renminbi. And then if those companies need to convert them back into US dollar, and that's also how they are doing their reporting, of course, in USD, then those revenues are declining in significance because the US dollar is more strong. So this has impact on the earnings of these companies. And as the stock market is the projection of future earnings, then, of course, if the assumption is that those revenues are going down based on the appreciation of the US dollar, of course, this has also negative impacts on the share prices of these companies. But the most impact the US dollar possibly has is here on emerging market. And if I add the emerging market index here, you can see so the green green red line here, the space chart is actually the US dollar, the currency index, and over time, so starting 2007 here, and if I overlay that one with the emerging market, so an ETF basically replicating emerging markets, and you see quite a bit of overlap. So if the US dollar is in this case actually appreciating, I've inverted the chart, so it's actually the other way around, but here the chart is falling down. You see immediately also emerging markets losing value, whereas when the US dollar is actually losing strength, and this way in this chart it's going up, emerging markets are usually also appreciating in value. And so recently we also have seen that emerging markets are tanking a lot, and this is also being caused by the US dollar. Now the chart is looking with this breakthrough yesterday like it's going even further down here. So in that sense, the US dollar should gain even more strength, maybe going to 120 here on this chart. We'll see. That might be another downward pressure actually for emerging markets and for stock markets in general, possibly. And emerging markets are actually composed of around 30% of Chinese equities. So you'll see that this can work both as a catalyst as well as negative news in the short term here, but at some point in time, I think this metric will flip again. And I think this will trigger actually an outperformance of the emerging markets in comparison to the US equities. You can see this one here on this historic chart based from December 87. And as you can see, we're now at the lowest since 2001. And so over this time, the US equities actually starting from around 2010, they have outperformed emerging markets in general. So if you are not a trader, if you can, stay invested for some point in time, it's very, very likely that there will be also a flip in this metric. and at some point in time, emerging markets could start outperforming the US again. And this, those fund flows going into emerging markets will also be a catalyst to Chinese equities, but also like Indonesian or other Southeast Asian equities, for example. And so one of the key metrics to watch here is the US dollar, which currently is so strong because of this whole thing about monetary policy and Fed raising rates. Well, that's it. This may not be an indicator for the very, very short term, but I think in a couple of months or maybe already next year, this could be one of the major catalysts to drive fund flows back into emerging markets in China. Thank you guys for watching and see you in the next one.